What's going on here, guys? Welcome to the Geeky Investor, where stocks talk and we translate. Today, we're going to be discussing the stock market and the AI bubble in particular, and we're going to discuss if the stocks are currently overall overvalued or not. So make sure you stick till the end of the video because it's going to be a very useful one, and make sure you smash this like button if you enjoy these type of videos. So to begin with, we have ChatGPT has marked actually the beginning of one of the biggest stock market jumps in modern history. And as you can see here on this chart, so the top sectors since ChatGPT's launch, and as you can see here, these sectors, the biggest two are IT, information technology, which of course pertains to AI and whatnot, and definitely communication services. So these sectors and consumer discretionary services, these three are the biggest ones who have gained in market valuations when as of the launch of ChatGPT. And as you can see here, for the companies, we have Nvidia, and oh my god, who has invested in Nvidia over the past couple of years? They have made a lot of money. They have increased their share prices by more than 1,000 or more than 10 or 11x within these couple of years since ChatGPT's launch a couple of years ago. We have these other companies, Meta, for example, from Facebook, Western Digital, and Broadcom. So as you can see, since the launch of ChatGPT in late 2022, the S&P 500 has surged 80%, driven mainly by massive boom in technology-related sectors, and importantly, these two, so communication services and IT, have actually recorded the largest gains. And as we can see here, Nvidia, of course, was the biggest stock winner when it comes to just individual stocks, rising to become the most valuable company in the world. And as of just a couple of weeks ago, the market valuation has actually surpassed $5 trillion. And here we have the boom was even more dramatic among startups, these what they call them, unicorns. So the 10 most valuable startups in the world today are all in the AI sector. And actually the top 17, and we can see here, so I'm going to be zooming right now. As you can see on this graph right here, we have 17 stocks. These 17 startup companies who have gone into the stock market and went IPO. These 17, 14 out of them are AI related, and just 3 are not AI related. And as you can see, their valuations have skyrocketed, and they have started with more than $1 billion. So as you can see here, this is $2 billion and all the way up to the 12 or 120 or 12 billion dollars. So this is very significant for a startup company, and most of them, as you can see, they are AI related. Just 3 out of them are non-tech industries, and most of these companies are still losing money. So these companies here, these startups, they are actually bleeding money, not just losing money, because if you look at the balance sheet, you can see with the profits, they are all on the negative side, and they are severely negative. And with that, it's not going to be sustainable. So you're going to have to either make debt or dilute shareholders by issuing more shares and whatnot. So these companies are burning billions of dollars in the process. So although they have rapid growth, it is fueled almost entirely by soaring valuations rather than actual profits. So the companies are not really making profits. They have their share price increase, and then they dilute and they issue more shares of this high valuation so that they get more money to kind of pump it. So that's one way to think about it. So this reflects a pattern similar to the past in the tech bubble, so in the 2000 and 1999, where the excitement and future potential overweigh the current financial industry. And with the AI, as we can see, there is massive AI demand for products and services triggered by explosive revenue growth for leading companies. Now, for example, if you look at this graph from here, we've seen companies, OpenAI, for example, as of August 2025, they have $13 billion in revenue, although in just March 2023, they were only 200 million. So as you can see, that's a very strong growth, and that's actually more than 6,400 increase in their revenue, which is a skyrocketing, and that's very nice to see. So in just 2 years, OpenAI has increased that significantly, sending its valuation to skyrocketing margins and numbers. So in theory, these AI companies, including ChatGPT or OpenAI, the ChatGPT's owner, can become high margin business because they can be like, let's say, Nvidia, they can be like Adobe and other companies where they have profit margins reaching 30% as net margins, and actually gross profit margins as high as 80% or even more than that, 85%. So, and this pace, at this pace of growth, their valuations might be actually justifiable if one could think of it from one way. But in the other way, you can see XAI, for example, Elon Musk's company, with, X or Twitter and Grok. So we can see that their revenue has grown from $100 million to just $7 billion. Although this is, this is a significant growth, it's not as significant as these other companies. So one would, raise questions about whether these companies are, they are heavily investing in a lot of things that are not yet making profits, which could, question or put questions for the investors as we're seeing these valuations are kind of skyrocketing while they are not really yet making a lot of money. So that's something important to keep in mind over time. And actually, I wanted to show you this one right here. If you see, these are the top 17 companies in the S&P 500. Now you can see Nvidia, Apple, Alphabet. As you can see here on the right side, most of these companies are actually, AI related. So Nvidia, of course, they have a lot of things in the AI. Apple somehow, Google definitely, Microsoft, Amazon, Broadcom, Facebook or Meta, Tesla, of course, and, most of these 17 companies. But then if you look at it from the top 10 companies or from the top 17 companies, only just a couple of companies, mainly 3 companies, are not AI related. So Walmart, JP Morgan, and Eli Lilly company. So these 3 are mainly the ones that are not yet really tech heavy. Although some people could argue that Berkshire Hathaway is also not, ExxonMobil and Johnson & Johnson, and maybe in one way or the other, which is kind of debatable, is Visa. But overall, as you can see, most of these, what I'm trying to say is most of the S&P 500's top companies, not just the startups as we were just saying, but also the top companies are all AI related. So this is kind of, as if the S&P 500 is increasing in valuations, but it's mostly tech driven. So that's what I wanted to say right here. And on this slide, if you can see, it is not only AI, it is not only companies that are investing heavily in AI, but it's also governments, as you can see on the graph right here. So for example, you have these countries, US, UK, Germany, and China, and the number of data centers that they have. So for example, the US has more than 4,000 data centers when it comes, to their overall country. But UK, Germany, China, France, you can see each one of those have around 300, 400, 500. So maybe the US is more than a couple of these countries all combined. Although I think the data on China is not really accurate. 381, I don't think this is accurate whatsoever, but that's what we got reported officially, all right? So what I'm trying to say here is the global competition to build massive data centers is heating up. So it's not just between one company and the other, but it's also between countries. And this is driven by enormous computing power required to analyze data and heavy analytics that are really needed for us to push this thing forward. So there is a lot of investment now led by the United States and China, as we can see here on the graph right here. I'm going to be zooming. So this chart, by the geographic area, for example, US and China are investing very heavily from 2013 all the way to 2024. As you can see, these countries are investing heavily into AI-related technologies and startups. So AI investment is now led by the United States and China, both pouring in resources into infrastructure, talent, and national strategies. So that's important to keep in mind. It's also nice to notice that, guys, as you can see, it's not just companies that are investing, but it's also countries. So AI is definitely going to be the future. It's just like the .com or the internet. It is already the reality. By that time in 1999 and 2000, it was kind of, when people were saying it is the future, and that's what really happened. The same is happening right now with AI, and in 10 years, we're going to look back and, oh, damn, this was actually right. But is it that the valuations are kind of justifiable as of right now? We see the valuations are so high, but they are not yet making a lot of profit. So are they justifiable or not? Please let me know in the comments down below, and I see you in the next video.